Hello, everybody. Welcome to Everything Accounting. I'm Alfred, your friendly neighborhood accountant, and I'm here to talk to you today about pricing out your services for a service-based business. There's a lot of times I'll get questions about like, hey, what should my pricing model be? Or what should we be setting this price at? Or how much should we be charging for our services? And it really doesn't matter in terms of which industry you're in. It's really in understanding these key factors that we're going to go through. So the first thing that you want to understand is what is the standard pricing for the service that you provide. So as an accountant, as an example, if I'm charging out at $5,000 an hour, but every equivalent accountant is charging at $100 an hour, why would anyone come to me? It doesn't make any sense. So what you should do is figure out what your competition is pricing at and try to build out a pricing model that fits for you. Now, what you're going to bring into the equation is what your expertise, what your knowledge is, what you're doing different than your competitors to add value, and in doing so, that will adjust your pricing model. So again, coming back to myself, as an accountant, when I first started off with Zagul Consulting, I built my pricing based on key metrics, knowing that in the industry, there's a standard pricing for different tiered accountants. So junior accountants have a certain price point, bookkeepers have a certain price point, senior managers have a certain price point. You have junior partners that have a certain price point and senior partners that have a certain price point. And it's very similar with accountants as it is with lawyers. So these price points are relatively built in to the industry. So for me, when I started off my business, I'm like, I could realistically, as the main partner / CEO of Zagul Consulting, I could bill out at $1,000 an hour. But then the other question is, why would they come to me if a senior partner at KPMG or MNP is charging at $1,000 an hour, right? I would go to them. If I'm going to pay the exact same amount of money, I would go to a senior partner at KPMG just because they have the resources to back it. So it's really important to understand who your key clientele is that's going to be paying this. And that leads to the next question is, what can your clients actually afford? Now, this is not pinpointing that they can't like if you really can't afford $10 for bookkeeping or accounting services, then maybe I'm not the accountant for you. Maybe you shouldn't be getting an accountant. It's one of those situations where like if you can't afford it, that's one thing. But if your clientele, the average clientele that you're working with, say can afford $100 an hour, and that's the clientele that you're reaching for, that might be the dictating price point for you at the time. If your price point is set for someone along the lines of Apple or Microsoft, where they can afford $10,000 an hour, right? Then that's who you're going to go for. You're going to be pricing yourself at that level. It's really important to match and build out basically a marriage between what the industry standard pricing is and what your client acceptable pricing is. Because if you match both of those, you'll constantly have clientele coming through the door. The other side of it is obviously understanding that not everyone is going to be willing to pay your prices. And that's just a hard truth. Obviously, for me, when I first started my business, I wanted to get everyone through the door. So if I set my price at, say, $1,000 per month, but client A comes to me and says, hey, I can only afford $300 a month. For me, when I'm first starting off and I had very few clients, it was just the reality that like, hey, I probably can't say no to this client. So I'll be like, okay, what I'm going to do is I'm going to accept your $300 a month for services, but knowing that as you grow, I'm going to need to grow and there's going to be an increase in prices to get me to that point. And then you start working together, given the fact that you're building a long-term working relationship with these clients. Now, I had other clients that were great with that, and as I grew, they grew. Then there was other clients that they're like, hey, I'm not going to be willing to pay any more than that. And I hit a point where I'm like, it's not sustainable for me to continue that. So we had to end the relationship. We had to end the working relationship at that point. And it really just depends on the client base. It really depends on what you're providing. It really depends on what works for you, right? I have clients that have been at the same price point for years, but it's because the work that goes into the file is not difficult. So it's not fair to me to charge more, right? So there's a lot of factors that come into play on my end, at least, where I was building out my pricing based on the client base that I'm working with, but also building out my price point based on the professional services that I'm providing. So the next thing that we're going to talk about is really just understanding what if there isn't a standard price point for the services that you're providing. So when we're looking at a business like a cleaning service, there isn't really a standard price. There's obviously competitors that'll charge X, Y, and Z, but you really need to understand what you're getting out of it. And for you, depending on the service that you're providing, you might not be billing per hour, you might be billing per clean. If you, next to your competitor, you take half an hour to clean an entire home, which would be incredible, by the way. If you are, come talk to me. But if you are able to clean an entire home in half an hour, and all your competitors are able to do it in an hour, then it's not fair that you're going to be billing half the price per house, right? You're doing the exact same amount of work. So you need to showcase your efficiency and say, I'm willing to do this at this price point, but we're going to be doing half the amount of time. We're going to cut your need for us to be in your house by half. Then people are going to be willing to pay for that value. And it might not be 50%. So if they're charging, say, $100 per hour, you could charge $65 per half hour, right? Now you want to figure out, are the clients that you're going to, are these houses that you're going to willing to spend that $65 to clean their house? They might be willing to spend $100, but you're so efficient that even if you have to stay a little bit longer, you're still making more than other people. And then the word of mouth starts to spread. So that's where you really need to understand, you really need to figure out the balance between what you're providing, the value you're providing, and what the clientele is willing to spend. Value is always key. So if you know and you've figured out, and not everyone does, but if you've figured out what the value is that you're providing to your clients, you can build a price point based on that value. So looking at the value that you're providing is key. When we're going into an industry that's a little bit different here, that isn't as structured as others, right? One of them that comes to mind actually is vets. Vets do not have a structured bill. Every vet can be different. You can go to one vet down the street that's going to charge you $1,000 for an operation. You can go to the vet two cities down and they'll charge $800. It just all depends on the vet and what they're wanting to do. And it's just because in their industry, they do not have set pricing. So it's based on their expertise, based on their knowledge, based on all these things, right? They have every right to do so because I'm going to go to someone that I trust with my dog, right? It will not matter to me, honestly, and I'm saying this as a dog owner, and all you dog owners will know, if your dog needs an operation, you're going to spend thousands of dollars to deal with it, right? So you don't care how much the vet is charging, you want to take care of it, right? You want to make sure that your dog is taken care of. You want to make sure Zoe here is taken care of. So it's really, really important that you know that, like, as a client of these vets, you're going to constantly be willing to spend whatever it is to make sure that they're healthy and taken care of. Vets know that, right? And I'm not saying they're going to gouge you, but it's just the reality. So me as a client, I don't care about price if my dog is sick. There might be others that are like, you know what, I need to focus on price. I need to make sure that I'm going to the right person. So they're not going to go to the vet down the street. They're going to go to the vet 2 cities down. So it really, really depends on the client base that you're working with. So understanding that, hey, this is a certain price point with your competition, it's the thought of benchmarking. And the term benchmarking is really taking into consideration what other people will spend, taking into consideration what other competitors are charging, and you use that to set your prices. Also, you use that to set the value that you're providing. Because looking at, again, using myself as an accountant, the accountants down the street might only be doing tax. They might only be doing bookkeeping. They might not be doing both. So what would be the price point for someone like me who does bookkeeping, accounting, and tax all in one throughout the year? It's very different. But in merging those 3 together, I was able to come up with price points for all my clients. So you want to use benchmarking to a degree where you understand what your competitors are doing, what they're pricing at, and what they're charging, but also knowing that, hey, there are going to be some differentials. There's going to be some changes that need to be accounted for. And that's where you come in and you have to make that decision. The other side of it is these prices can change. What people don't really understand, sometimes they're like, hey, I need to set this price and this is going to be my price for the rest of my life. That's not the case. The economy changes, prices change, your life changes, your experience changes. There's so much that comes into it that maybe next year you have to increase your prices. Maybe in 5 years you have to change the entire pricing model that you have entirely. It really just depends, right? So it could also be that your client base is growing to a point where you need to charge more, not solely because of like needing for employees and the growth of your company and all that, but also your services could be changing, right? Your clientele growing to a vast point where you can't sustain them. You might have to change your prices because now you're like, I can only afford the top payers as clients. You can't afford to service all clients. So you just really need to understand what you're doing. You also need to really understand that, hey, it's okay to change your prices. Now, do not go changing your prices every month. Do not go changing your prices every week, because then you're going to just lose clients. So it's really, like I said, it's really important to understand your clients. It's really important to understand the market that you're in. And it's really important to understand what the value you bring to that market. Because once you do that, you can start building a price point for your services. Anyways, that has been pricing your services with myself, Alfred, your friendly neighborhood CPA. This has been Everything Accounting. And honestly, if you have any questions about pricing your services, message in the comments. So let me know. I'm here to help. Whatever you need, just subscribe, like, comment, whatever you want, really, at the end of the day. And hopefully you enjoyed this video. Hopefully you got something out of this video, and hopefully we'll talk soon. Thanks.